Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for October 25th, 2018. And we're talking earnings. A couple earnings before the market opened today, and then most of them, including Amazon, Intel, Google, Expedia, Chipotle for solar, and Gilead, just reported. So we're going to take a look at daily charts, level spots, markers to watch, and of course, take a look at our expected moves and get ready for some departure plays into Friday. We'll start with the S&P just to get us a foundation. On our intraday chart first, we're talking gravity spots. We've been discussing these on the videos and of course during sessions. These are Don Kaufman's gravity spots. And the first one is 2682. That's about where the market's going to close or at least push after hours in today's session after trading is over. Today was a trend day up, fell just a little bit shy of that 2731 marker, gravity spot for Don, and otherwise down to the lows. So Friday session will begin under this level. Watch this 2682. Nonetheless, here we are. Daily chart once again shows us that is our spot. We did have a wide range day, but we started at the low, ended at the low. And that's going to give us a reversal candle at exactly the Dawn spot, 2682. With that, we'll start with Twitter. Twitter reported earnings before the market opened, and we had an initial surge that continued with an opening gap. Twitter gapped up to this 33.5 per share level, and that's going to be, roughly speaking, our pivot point. I think mainly it's the 200-day simple moving average. So Twitter is stuck at the moment between the falling 50 and that rising 200, just shy of 34 per share. If you're going to be trading this, look for a departure bullishly up away from 34. But until that happens, we do have a departure play or a sell swing, and that's going to trigger under 31 per share. That could start to push further in the gap. If you look closely at the overnight data, we do have a triangle forming. If you do want to trade Twitter tomorrow or into next week, look to play a breakout from these levels, short biased aggressively beneath 30.50, or I'd say alternate thesis on any breakout above 33.50. Amazon's going to be the big one to watch. Now, starting before we talk about the earnings, we've been updating our daily chart on Amazon. We did have a bullish bounce. This is why we use moving averages. It was to the 200-day simple over this spot. That resulted in a bullish bounce after yesterday's amazing sell-off and back just shy of the moving average high. That's 1800. Low today, yesterday really, just about 1660, 1650. What was the expected move? Now this is where it gets interesting. So Amazon closed at the high, roughly 1782. Take a look inside its expected movement, right? This is after market hours. Look at that 100% implied volatility with a $105 expected move. What happened today? So roughly 17, make it 1800. Where was it? 1795. Gapped down. Sure, the market's still moving. Sure, things are still in motion. But that takes us roughly to, if it's about $105, and if we take that 105 expected movement, take that away from roughly 1795, that puts us at about 1690 per share. Roughly 1690 per share. It's Amazon under 1600. So that's anyway where the market's going to potentially open and look to trade away from it. That's going to take us down to 1690. So watch Amazon back at this spike reversal low just above the 200-day simple, and of course the easy to remember reference level at 1700. Any departure from that could be tradable on a short term or swing basis. Next up, Intel. Intel, unlike Amazon, is going to gap up, but then as we're speaking, faded back down. So on its intraday chart, we can see that movement as it opens tomorrow, but we keep watching our pivot points, 43 per share, $45 per share, and just about 47.50. These are key spots for Intel as it continues downtrending. And it also hit its pivot like the S&P. Intel trades low to high and potentially high to low. What was its expected movement? Again, the implied volatility was about 110% at about $2.67. What's that? Closing roughly at 45, $2.60. Hit it, back down. So that's one that got it on the earnings announcement but then immediately gave it all back. So watch your 45 per share level and roughly 47.20, which is your overnight high in Intel. And all of that in the context of a persistent downtrend on the intraday chart. Google, and it's not going to be at a key level necessarily, like Amazon. It's beneath its 200-day simple, bear flag into it, and lots and lots and lots of volatility. We'd of course expect nothing less from Google. It closed the session, this will be easier to do math on the fly, at about 1100 per share. What was its expected move and implied volatility? Not quite 100, 95%. What about the dollar movement? Roughly 57, say 60, 57, 60. So what was its play? Roughly speaking, 1100, 1110. So 60 minus 100, even number speaking, of course, 1100 minus about 60 takes us to 1040. That was the expected move, the initial stab into it, and the bounce away from it. So it's consolidating at this 1060 per share level. Not quite all the way down there. We'll start Google on Friday session with respect to 1040, 1060, and of course the departure, as we're seeing, from 1100. Still consolidating, but it, like most other stocks, is downtrending. We'll jump around to Chipotle, because Chipotle has an interesting play if you're swing trading with us. If you're playing options or other plays for Chipotle, it is into a critical support level. So whether you trade this or not, this is going to be a valuable lesson to watch, or at least a referential, about how spots, markers, levels, and swing trades work. Chipotle is into the 410 per share level, roughly 420, and that's going to be the prior spike, support, support, support. It's the 200-day simple, and of course a price trend line level. It's going to start off tomorrow's session, looks like, at about 434. Any ideas or updates on the expected movement? $32 in Chipotle, which sounds amazing for a burrito company. 140% implied volatility, $32 up or down. So did they get that? Not quite. So 420, roughly speaking, 415, 423. Didn't get the full movement, but it's going to start Friday session up here, about 432. I'm going to jump around a little bit. 435, these spot marker levels. We'll finish up with First Solar. And First Solar is a stock that we might not trade, but we did a little bit earlier in the year. And we'll take a look at this persistent downtrend in motion. The stocks that go in downtrends tend to keep downtrending, especially when bear volume confirms them. So lower highs, lower lows, lower highs, falling moving averages, and a push to new lows for 2018. It closed the session about 43.50 per share. Its expected move, 141% implied volatility at about 3.3. What happened here? That's about 3 point. This is even easier math. So 43.50 minus 350 takes us to 40. That's a great way to close the video for tonight. That's an expected move $3.50 lower, and we're going to open tomorrow's session, that is if First Solar holds here, at new lows into our expected move. Once again, that's roughly speaking $3, almost $3.50, just shy, and it's at 40 per share. What the expected moves do, they're efficient analysis and efficient planning, and we often trade departures. So if First Solar starts to bullishly fill the gap's going to take us up to here. That could lead for some fade trades to the upside, and if it starts to falter and fall beneath it, that's going to put it in trouble. Either way, be safe, take care. This is Corey Rosenblum bringing you your Theo Nightly video for October 25th, 2018. Take care.